Gold is money, has been for thousands of years. I know I'm not the first one to tell you that. And therefore, gold versus dollar is a Forex question, in my view.
Okay.
And that's not just being pedantic or theoretical. I think that's really important that people remember that gold is money and treat it that way. Where do I want my savings? How
Right.
much do I trust the greenback? But my explanation is that we finally reached that Minsky moment, the aha moment, whatever you want to call it, where more and more people are starting to say, you know what? A little bit of allocation to a safe haven like gold is not a bad thing.
The gold market continues to establish itself as a global financial asset as traditional pillars of strength weaken due to higher prices. According to the latest research from the World Gold Council, the best performing precious metal for the week was gold, but still down 0.80%. Lobo Tiggre, analyst and author of Independent Speculator, declares that gold is money and has been for thousands of years. He believes we've reached an aha moment where more people are starting to recognize that a small allocation to a safe haven like gold is a wise decision. Tiggre emphasizes that the comparison between gold and the dollar is essentially a Forex question. As of April 2022, the dollar was used in 88% of all daily currency transactions, according to the Bank for International Settlements. Data from the International Monetary Fund shows that it accounted for 54% of all foreign exchange reserves. While some may predict the imminent demise of the dollar, Tiggre doesn't subscribe to such extreme views. However, he acknowledges the trend toward de-dollarization, influenced by events like the second invasion of Ukraine by Russia and the potential seizure of Russia's assets by other countries. When it comes to gold, central bank gold demand continues to attract a lot of attention in the marketplace. In the first quarter, the WGC noted that central bank purchases were the strongest on record. Fast forward to the second quarter, and central banks increased their official reserves by 183 tons between April and June. Central bank demand was 6% higher than in the second quarter of last year, but down 39% from the first quarter. Demand for gold was estimated at 1,258.2 tons in the quarter that ended June 30th, up about 4% over the corresponding period a year ago, according to the World Gold Council, WGC. The drop came as the People's Bank of China halted its gold purchases in May and June, ending an 18-month shopping spree. Lobo finds it interesting that China has reported not buying gold for 2 consecutive months, yet gold prices didn't significantly drop. This suggests that China's purchases are not the sole driver of gold prices. Before we jump into more content, consider subscribing and enabling notifications to stay updated with our latest uploads.
Gold is money, has been for thousands of years. I know I'm not the first one to tell you that. And therefore, gold versus dollar is a Forex question, in my view.
Okay.
And that's not just being pedantic or theoretical. I think that's really important that people remember that gold is money and treat it that way. And I think the world is actually remembering that now. And I think that's part of the answer to your question. It's not the price of gold like the price of coffee or even copper. It's gold versus dollar.
Okay.
Like, where do I want my savings? How
Right.
much do I trust the greenback? And in this world, more and more people, the weaponization of the dollar, I'm not the first one to tell you that. I'm sure the audience has heard that too. Like, these things are real and they matter. And it doesn't mean that, a la Brent Johnson, that everybody dumps the dollar, it's the end of the dollar tomorrow, or August 24 last year when the BRICS were going to adopt a gold-backed currency, right? Never mind all these crazy headlines. The trend that's happening now, and even Brent would agree with this, the trend is there towards de-dollarization. And the impact of the consequences of Ukraine's second war with Russia, the second invasion of Ukraine. And, and now, they're talking about just taking the interest on Russia's seized money, but it's still taking Russia's money. I'm sorry, you can legally massage that all you want. But the point is that they're taking Russia's stuff and dollars. So what does that do to anybody else that holds dollars? Obvious. And we see the central bank buying of gold. I think it's a perfectly natural and logical thing. And it's really interesting to me that we've had now 2 months in a row where China has reported not buying gold. And when the first report like this came out, gold tanked in a very visible way. Second one came out, gold just kind of wobbled. And why? Well, if China wasn't buying any gold all of June, which I don't think is true, but let's say it was, and gold still went up to, within kissing distance of 2,400 last Friday on the close, without China buying, that tells you it wasn't just China. which comes back to the first answer to the big what's going on now. But it's not just China,
Right.
and it's not just the central banks. And my reason for this, the evidence that I can point to, is that we saw a hockey stick in gold this year. The gold-dollar exchange rate really, 2,300 is the new 2,000 in gold, which is like. But the central banks, the global south, they've been buying gold for years. That doesn't explain the change this year. Like what? And even the new war in the Middle East, that's last October. And so if you're going to be, buying gold as a safe haven because war in the Middle East is not a good thing, right? That's last October. It doesn't explain the hockey stick this year.
It doesn't.
So therefore, this is my explanation. Now, that doesn't, again, this isn't a proof, but my explanation is that we finally reached that Minsky moment, the aha moment, whatever you want to call it, where more and more people are starting to say, you know what? A little bit of allocation to a safe haven like gold is not a bad thing.
Barrick Gold is striving to be the most valuable gold mining company in the world. The company expects to produce an average of roughly 7 million ounces of gold equivalent, which includes its copper output, annually by 2030, a 30% increase from 2023's level. Franco-Nevada is a Canada-based streaming and royalty company. It has a diversified portfolio, with agreements tied to gold, silver, platinum group metals, PGMs, iron ore, and oil and gas. In 2024, 75% of its revenue will come from gold and other precious metals. Lobo acknowledges that gold stocks have underperformed since 2020. Despite a significant spike in gold prices, gold stocks did not perform as expected, which was disappointing for many investors. He is optimistic about the prospects of gold and gold stocks. He believes that those who invest in quality gold stocks will see substantial returns as the gold-dollar exchange rate continues to rise. Let's now turn our attention to the video again.
Since 1971, since Richard Nixon, completely severed gold from the gold standard, there are multiple variables. And clearly, something like war scare does move gold. And you can see gold moving directly, inversely to the DXY, the dollar index. So therefore the dollar, supposedly. You can see it on a daily basis. So that's a factor. Other things, there are multiple factors. There's no one variable. But the one strongest correlate for 50 years has been real rates. And it's been some months now, actually. It was late last year or sometime last year. But I ran the correlations, and actually nominal rates had a higher correlation than real rates as of last year. Over 50 years, like something has changed. Portfolio allocation question is something that I think, I can't give you a statistic. I don't have a number here, but I'm seeing this more and more on mainstream financial media, not gold bugs, not Peter Schiff, right?
Yes.
But some guy from B of A or some big hedge fund saying, well, we're putting a little bit more in gold now. Or like when people say, Tina's broken, what do we do? And somebody says, gold.
Like a goon lock.
Right. And before, they used to get laughed at.
Yes.
Like, what are you going to do? Gold?
Right.
Like that has gone, that has changed from, what are you going to do? Buy gold?
Right.
To, well, how about some gold? This is a trend that is measurably happening now. And I'm not a technical guy, but for gold to bounce off 2,300 repeatedly and then head back up again, that's showing some really interesting strength, despite a strong dollar and these other things. So, but the gold stocks have underperformed. This was
this was the original question.
The truth is that they have underperformed since 2020. They had this huge spike in gold, and they've been underperforming. So the short version would be this breakout this year, they're performing. That leverage is back. The mojo is back, if you will. So no, they're not broken. Gold shocked people. People paid attention to it. And then somebody said, well, how do I get leverage on this? Gold's working. What gives me leverage to this? And you could see, gold moves 1%. The good quality gold stocks move 3, 4, 5%. That's why we bother buying these stocks at all. And I understand that's been very disappointing since 2020 for that seemed to be broken. But I don't think it's just a fluke that we saw this year. I think the reasons why, expectations, all kinds of things, why it wasn't working so well in recent years, I think this breakout this year has brought that back. And if it continues, like if gold goes downhill from here, if I'm completely wrong, all of us here at this conference are completely wrong, gold's going back to $700 like Harry Dent promised us 20 years ago, right?
Good old Harry Dent.
Good old Harry Dent, right? So that would be bad, but that's not what we expect.
Yeah.
You know, if you're at this conference, or probably if you're watching this interview, you do expect the gold dollar exchange rate to go higher. And you want your frickin' gold stocks to go even higher. And I guess if you want to make this the Lobo waves his arms scene of the interview, I do think you'll get your payday. I do think those stocks, the better ones, not your crappy moose pasture stocks, but
Yeah,
the
the
ones
better
that have
ones.
assets that matter, that actually have any gold, I think you'll get your payday.
Gold is considered a safe haven metal, with investors purchasing it to hedge against risks such as rising inflation, geopolitical events, and financial crises. By mid-2024, gold had rallied over 20%, reaching more than $2,450 an ounce, primarily driven by inflationary pressures and geopolitical concerns. The report said that the total gold supply grew to 1,258 tons, an increase of 4% from last year. At the same time, mine production hit a record for a second quarter at 929 tons. Are you currently considering gold as a hedge against inflation and geopolitical risks? We want to hear from you. Feel free to leave your thoughts in the comments, give a thumbs up if you liked what you saw, and subscribe to stay connected with our ongoing exploration.